So we saw a pretty considerable spike in the euro higher yesterday, clearly timing-wise linked to ECB President Draghi's speech at an ECB forum in Portugal. And if we look, sort of pick apart the rhetoric, yes, it does show the ECB's slow shift away from dovishness, talk about the expectations of a reflationary environment returning from a deflationary one, and an explanation of the reason that inflation is so low, attributed to oil and other one-off factors that are eventually going to base and stop acting as a deflationary force. So yes, the inflation sort of rhetoric does suggest an attempt to shift the focus towards higher rates. Also, President Draghi citing what we've all seen, which is more EU cohesion in the light of the Dutch and the French election results, with a very pro-EU Macron assuming power in France. And I think that has, at the margin, also been supportive of the euro. But in any case, we saw a very vehement rally higher, if you will, in the euro dollar, euro yen, and even euro sterling trading to new highs for the cycle early this morning at least, and an enthusiasm for the euro. As we're seeing sort of this global theme of more hawkish central banks, the Fed sort of persisting and sort of trotting out the hawkish relative to recent U.S. Data, the hawkish rhetoric there as well. I think as well, this is finally beginning to have a negative effect on asset markets, and some of the bonds are starting to pick up this theme as well. We've seen rate expectations heading quite a bit higher for further out the curve in Europe after Draghi's rhetoric, but in general we're seeing as well that the long end of the curve, U.S. Treasuries coming off quite as well. And the interesting thing yesterday was we had Treasuries week and we had equities week, and pretty sharp global risk-off move. And then seeing the patterns in the currencies, where the pattern is, this is a toxic environment for carry. So anything that has a label of carry or risk on it has done very poorly, whether that's emerging markets or within the G10 space, the New Zealand dollar. Those have been very weak, and if this environment continues, I would expect that to continue as well. As for the euro dollar, eventually if we're getting lots more risk off, I think the dollar is, plays its role as a safe haven. Could be a little bit weaker versus the euro, possibly against the Japanese yen, although we have to remember with that fixed yield curve policy, the Japanese yen supposedly should be doing poorly if interest rates continue to head higher. So we're going to need to see interest rates flat combined with risk off, I think, to see a big correction in some of the yen crosses. I think that could be a risk if we continue to see risk off and it gets the move gets particularly brutal. But for now, let's see what the environment holds here. In any case, I think the sharpness of the euro rally has to be respected, but could be a little bit in excess of the actual supports for it. And I think all traders need to be on red alert for the potential extension of risk-off environment and what that will mean for the riskier and less liquid currencies in this market.